I have a question for you. If you double $100 every day for just 30 days, how much money would you have? The answer is over $100 billion. So if the math is that simple, why aren't you a billionaire? Because in the real world, the daily double is a mathematical myth designed to blow your accounts. On the screen, you see a trajectory of Nancy Pelosi, Warren Buffett, and the S&P 500. Even the people accused of having insider information, the most powerful player in Washington and Wall Street, are not doubling their money in a day. They are compounding it over decades. Today, we are going to dismantle the amateur's dream and replace it with the professional's reality. We will talk about why your $100 account is your most dangerous asset and how to manage the risk like the 1% people. Now, let's have a look at the video again. Notice the dates. These are 2012 to 2024. S&P 500 returns only 415%. Warren Buffett returns 426%. And Nancy Pelosi, which is accused of having the insider information, is only having 917% in over a decade. So let's break everything down. The alpha secret. Pelosi didn't reach 917% by scalping Bitcoin or gold on 100x leverage at 3 a.m. She reached it by conviction, investing heavily in tech stocks like Nvidia, Apple, Microsoft before they became the behemoths they are today. Using long-term options to gain leverage without the risk of being liquidated in a single day's volatility. Now, notice the dips in her line. There were months, even years, where she underperformed the market. She didn't panic sell, she stayed in the game. So, what is the lesson here? Even the insider coin takes 12 years to hit a 10x return. Why are you trying to do it in 24 hours? With that example in mind, let's deep dive into the three pillars of risk management. The foremost and most important is the 1% rule. When you have $100 account and you lose $10, it feels nothing, like it's just like two coffees, right? No, it's not two coffees. A $10 loss is a 10% drawdown. In fact, to get back to even a 10% loss, you will need an 11.1% gain to get back a $100 account. And if you lose 50%, you need a 100% gain to get back to $100. So, what should be your strategy? The strategy should be very simple. Never risk more than 1 to 2% of your balance, total capital balance, on a $100 account. That means your stop loss must trigger at $1 or $2. Believe me, this will feel so slow, but it makes you unkillable. You would need to lose 50 or 100 times in a row to blow your accounts. And the second very important rule is the positive expectancy formula. That means you have to risk less and reward for more. Beginners win 80% of their trades, but losses $50 on a 20% they miss. That means their result is zero and their accounts is finally blown. But the professional traders, they win only 40% of their trades and makes $3 for every $1 they lose. So, 6 losses means minus $6, but 4 wins means $12. And one of the most important trick that you need to understand is that if you are long on gold, Bitcoin, and Euro USD all at once, you are not diversified. In fact, you are just short on the dollar 3 times. If the dollar spikes, you lose all three trades simultaneously. Professional risk management means ensuring your trades are not all betting on the same outcome. Now, let's focus on how to build the psychology for a professional fort. Think about yourself. Are you a trader or a gambler? Obviously, new trader will be emotional. He will be focused on the result of the next trade. But pro trader will be robotic. He will be focused on execution of the next 100 trades. So you must deal with your FOMO. and revenge trading. The market is a master at triggering your fight or flight response. When you lose a trade, your brain wants to get it back immediately. This is called a revenge trading. So, how to fix it? Have a daily maximum daily loss limit. If you lose 30% of your account in one day, turn off the computer, go out and have a walk. Market will be there tomorrow. You will be there with a better plan. But remember, if you stay in the market with frequent losses, you might not be there to keep trading in a state of anger tomorrow. Make a journal of your trades. I have put an example journal in the description. You can go and download it and make a record of what are your trades and what mistakes you are doing. Remember, your $100 account is not a lottery ticket. Treat it like a startup company. It can be double in a year using proper risk management. If you have a skill to manage that, then you can manage $100,000 as well. But if you want to gamble it, you will lose your $100,000 as well. So losing your $100 account means you have blown your company and you have defaulted your company. And that is what you will do with your $100,000 company as well. And last but not the least, Nancy Pelosi and Warren Buffett. They are not rich because they have information or they have the insider information. They are rich because they are disciplined. Information is useless if you blow your account before the information comes true.